So, what if the script for the next big market shift was already written, more than 40 years ago? Today, we're diving into a really powerful analysis that suggests the economic conditions we're seeing right now look a lot like 1979. We're going to break down why this historical echo could have massive implications for the silver market. And hey, if you want to stay ahead of the market, this is something you're definitely going to want to see.
It all boils down to this question, right? What can a crisis from decades ago really teach us about our financial world today? Well, as it turns out, the parallels are pretty shocking. And according to the source we're looking at, they might just be a blueprint for what's coming next.
All right, let's get into it. Here's our game plan. First, we'll look at the tricky spot the Federal Reserve is in. Then, we'll talk about what happens when your money just starts losing its value. From there, we'll see how that connects to a huge supply problem in the silver market, check out how this all mirrors the 1979 crisis, and then finally put it all together to see what it signals for the market.
Okay, first up, the Fed's tightrope walk. You got to understand this part because everything we're about to talk about really starts with the incredibly delicate and kind of dangerous balancing act the U.S. central bank is trying to pull off right now.
So here's the core issue. The source we're examining argues the Fed is basically paralyzed. It seems committed to keeping interest rates just where they are, but it's happening at the exact moment that new external forces are starting to push inflation up. And that creates this massive tension in the whole system.
So what are these external forces? The analysis points to something specific, a geopolitical shock, maybe a conflict in the Strait of Hormuz, which is, vital channel for global oil. A sharp spike in oil prices creates what's called supply-driven inflation, and that's a whole different beast. See, the Fed's usual tools are built to cool down consumer demand, but they're way less effective against inflation caused by a supply problem.
And that whole situation sets the stage for the real economic problem that's driving this entire argument, that silent wealth killer we call negative real interest rates.
What does that actually mean? Well, to put it simply, it's when the price of everything, gas, groceries, you name it, is going up faster than the interest you're earning on your cash. In this kind of environment, your money is literally losing its buying power, day by day, even if it's just sitting in a bank account.
And this chart here breaks it down perfectly. That nominal rate, that's the shiny number the bank advertises. But the real rate, that's the one that actually matters. It's the nominal rate minus inflation. And it tells you the truth. Is your wealth actually growing, or is it secretly shrinking?
And here's the kicker. In a world of negative real rates, all the usual safe places to put your money, like savings accounts or bonds, they just stop working the way they're supposed to. They don't protect your money anymore. They actually let it lose value. And that forces investors to start looking for other options.
So, if the traditional safe havens are failing, where does all that money go? That brings us right to our third point. Silver's supply squeeze. This is where the big economic picture smashes right into a very specific problem in one very important commodity.
So on top of all that economic pressure, there's this fundamental problem in the silver market itself. The source points out there's been a chronic deficit. For years, demand has just been higher than supply, which makes the whole situation incredibly tense and ready to pop.
And this quote from the source material just ties it all together beautifully. You've got this big macroeconomic push sending people away from traditional assets, and you combine it with a fundamental supply squeeze in silver. They call it an ideal scenario for a really significant price move.
This powerful combo of factors leads us straight to our historical parallel. Section 4, History's Echo. The argument here is that we don't have to guess what happens next, because we've seen this movie before. We have a blueprint from 1979.
Let's just do a quick recap of what happened back then. It all started with a geopolitical shock, the Iranian Revolution, which messed up oil supply. This caused oil prices to absolutely explode, which led to runaway supply-driven inflation. And the result? Investors ran for cover in hard assets, and precious metals just went on a historic tear.
This is where it gets really compelling. This table lays out the parallel perfectly. In both cases, you have a geopolitical shock in the Middle East, causing an oil spike. Both lead to high supply-side inflation. And, this is the crucial part, in both periods you have a Federal Reserve that's seen as being behind the eight ball, hesitating back then and paralyzed now. The historical outcome was a huge surge in precious metals, and the analysis argues the stage is set for the exact same thing today.
So, how do we tie a bow on all this? We come to our final section, a signal for change. This is about seeing these events not as just a bunch of random data points, but as one coherent message that the market is sending.
And here it is, the whole chain of events, all in one place. It starts with a shock, which leads to a specific type of inflation. That's met with inaction from the Fed,
which creates negative real rates, and all of that gets amplified by a fundamental supply problem in silver. See how each step just logically follows the last? It's building a case, piece by piece, for a major shift.
And here's the trigger. The source points to the Fed's dot plot. You know, that chart where officials map out where they think interest rates are going. The suggestion is we shouldn't see this as some boring report. We should see it as the starting gun. According to this analysis, the moment that plot confirms the Fed is staying put while inflation is running hot, that's the signal for the real market shift to begin.
Which leaves us with this one big thought to chew on. Are all these things coming together, the geopolitics, the inflation, the monetary policy, the supply issues, are they truly an echo of 1979? Is the market sending us a signal from the past, basically giving a potential roadmap to anyone who knows how to read it? That's the powerful question this analysis leaves us with.